I like the attitude you guys have towards your residents. I always use that as a bellwether. Like, hey, I'm an investor. I want great returns, but I always want to provide a great product or great service, whether it's real estate or whatever it is. I want to be proud of it.
Yeah, it's a big deal. Early on, that was a decision point for us. We said, hey, do we want to do third-party management and not have to deal with maybe some of the people headaches that come along with building out a property management business? But we went the other direction and said, no, look, we want to have control over that part of the business. We want to be able to deliver a great experience for our residents.
Hey investors, Chris Lopez here, and welcome back to our next podcast episode in our Build to Rent series. We've been building a series, an educational series on the Build to Rent asset class in real estate. It's an incredibly exciting asset class to invest in and grow. And it's one of the few, in my opinion, that has actually got an extremely optimistic outlook. So today's podcast, we're going to dive down into more of like the project level of, hey, how do you select a market? How do you find the site? And then how do you underwrite and actually build the project? So I have two great guests with me today. Now, the first one is Ryan Watts with Red River, and you probably recognize him from a couple other podcasts we've done. Ryan, welcome back.
Hey, thanks, Chris. I appreciate it. Good to be with you.
Yeah, I'm glad to have you back on the episode because the first podcast, when it dropped, we got extremely great feedback and people saying, tell me more, tell me more. So we'll definitely link to that. But Ryan, for those listeners who are not familiar with you and Red River, give us a brief background on Red River.
Yeah, sure. So I'm a co-founder and managing partner of Red River Development. We are a Dallas-based multifamily development company specifically focused on build-to-rent development. So we have about $400 million in AUM, about 1,500 units under management. We're an integrated company in the sense that we also have a property management business, and we brand all of our communities under Trulo Homes. And we have today 5 active BTR communities that we own and operate.
And then can you introduce Bill, our second guest on there? Because I know you guys have a deep relationship and he is a key player, a key sponsor in bringing some of these BTR developments to fruition.
Yeah, would love to. Yeah, so Bill Morton with Leo Brown Group. Bill and I go back many years, and my partner and co-founder Jay Dempsey, and he go back even further. Leo Brown Group, which Bill can certainly share more about, but they've got an extensive background in development, specifically in the Upper Midwest. They're based in Indy, and Bill's a real expert when it comes to knowing and understanding those markets. So with that said, I'll turn it over to Bill and let him give a little more color.
Yeah. Thanks, Chris and Ryan. Excited to be here and chat with you about BTR, just development in general. As Ryan mentioned, I am based here in Indianapolis and have been developing senior housing and multifamily housing for about 15 years. And we really like being headquartered in Indianapolis. It allows us to be familiar with several markets in the Midwest, the Cincinnati, Dayton area being one of them. So we've really had our ear to the ground for years and really excited to put something together here in the Centerville market, which we're going to talk about here in a little bit. So thanks for having us, Chris.
And as someone who is sitting in Denver, Colorado and have a lot of investments in Denver, Colorado, I am thrilled that you are headquartered out there in the Midwest because I like the numbers a lot more out there. And you guys have a little bit more friendly landlord laws as well. So I like that from the macro. Now, I have been following the build to rent asset class for quite a few years, just because it's been been an asset class growing so fast. But traditionally, it's been mostly institutional investors, funding and financing these projects. Well, when interest rates shot up, we, as investors, a lot of us started complaining about, hey, deals don't pencil out. But one of the things it did provide is that some of the institutional capital started drying up, which opened up opportunities for more of us, I say, small investors to be able to participate and invest in build-to-rent communities as capital stacks requirements has changed. So I'm thrilled to be able to actually invest more in BTR and thrilled to be, investing in some Red River deals. So Ryan, can you just give us a brief overview and the executive summary of the Stone Hollow project in Ohio?
Yeah, happy to. So this is a community that we're developing on a piece of land that we collectively own with Leo Brown Group. This will be our second development with those guys in the upper Midwest. So we also have a current community today in Indianapolis, and Bill can share more about this. But in addition to being our partner, our community in Indianapolis, and Whitestown is the specific submarket there. They also have a construction company, so they're going to be building for us on this project as well here in Centerville, Ohio. The project overall is a $58 million project, total capitalization, 200 units of built-to-rent development here, a mix of 1, 2, and 3-bedroom homes. About 25% ones, about 30% threes, and the remainder being 2 bedrooms. Average unit size about 1,000 square feet, roughly. We would anticipate, and just to kind of give you a quick flavor for returns, I'd say mid to low 20s IRRs and 2x multiples is kind of what we're looking at here, with a rough time horizon of 5 to 6 years.
So hopefully you guys picked up on some of the numbers Ryan dropped on there, because that's obviously what got me excited, and so many investors and institutional investors over the years excited about the BTR investment community. Bill, can you talk to us about the Centerville, Ohio market? Because starting at the macro, we got the opportunity with build to rent, and then finding the right market to build in. There's so many factors that come into play, because location is the one piece of real estate we can't change anything about. So tell us about Centerville and why you guys like it so much.
Yeah, sure. Thanks, Chris. Centerville is a unique market where it's really equidistant between two major metro areas of Cincinnati and Dayton, Ohio. So the combined metro population is about 3 million people. And we've done a lot of development in this area over the years. To be specific, we've completed about 6 projects, a couple $100 million over the past 4 or 5 years. So we really have, I've always kind of been networking with brokers and local officials on finding new areas of growth and new sites per se. But we really do like this specific submarket for a couple of reasons. One, the barriers to enter the market are quite high. The zoning can take up to a year, and we were lucky enough to go through that process and been all the way through zoning in about 9 months. Excellent public school system is a key factor in this area. Stable jobs. There's a large Air Force base, Wright-Patterson Air Force Base, that's about 10 to 15 miles from the site. It employs 31,000 people. 31,000 people. So that's a key factor to the area of the stability in the economy. The housing has continued to grow as folks have migrated away from the urban core of Dayton and Cincinnati. So those are just a couple reasons that we like the area. And being only about an hour and a half from our office here in Indianapolis, we're in the market probably once a week, having meetings. So we really consider it kind of our the next door neighbor to Indianapolis. So that's just a couple key points on the market, Chris.
Yeah, do you mind, because I started digging into the Ohio or the Centerville, Ohio market, as I started talking to Ryan a few months ago. And, from the high level, population is growing, jobs is growing, and that growth is so important. But one thing that jumped out to me was the average home value. And I don't want to misquote it, but can you give us an idea like what the average home value is? Because this was a pleasant surprise to me.
Yeah, that's a good point. When we did find this site, it was shocking to us that the neighborhoods to the immediate west and south of the site, ranch homes were going for, and still are, in the low 400 range, up to 500,000 to 600,000 for a ranch home. And the 4-bedroom family homes start in the 6s and go all the way to the mid 800,000 range. So having that ability to rent cheaper than you could buy was important to us, and really made us excited about the market. So very solid single family housing market.
And I always find that that's a barometer, because when I looked at, out-of-state investments in other parts of Ohio, a lot of times they're, $100,000 to $200,000 priced homes or duplexes. And, the numbers are good on the spreadsheet, but a lot of times that doesn't attract the type of a resident that's a great long-term one. And the fact that the home values are that high around there, I think really, states, hey, that's the type of resident that's living there for the jobs, the opportunities in the school system. Now, what is your development experience, Bill, within the Centerville market? Because I know you and your group have a pretty extensive track record out there.
Yeah, we have. Like I said, over the past about 10 years, we've developed 5 senior housing communities. When we say senior housing, it's age restricted, 55 and older, some assisted living, independent living, but 5 projects, a little over $200 million in total project cost. And those projects are, each of them are 10 to 15 minutes from this site. So we've really become familiar with some of the subcontractors, and really the communities themselves. We really have a feel of where things are growing, and it constantly really takes us to this Centerville area. So a lot of experience in the market, to plan on continuing to develop there into the future.
I love to hear it. Now, Ryan, I'm curious because I know this is a question that I've had some other investors have. So, talk about the market, especially hearing, Bill's expertise in, some senior living development. Can you talk about the demographics that you were looking for as you were at macro level looking? And then is this build-to-rent community a retirement community, or who's it open to?
Yeah, good. Both great questions. So, once we settle on a market and, Bill touched on some of the things that are attractive about that Cincinnati-Dayton market that we would wholeheartedly agree with. And so we believed, hey, this is the right kind of MSA to be in. Once we start drilling down and saying, okay, what sub-market do we want to be in a particular MSA? We really have a set of demographic criteria that we hold pretty tight to. And so we look at things like household growth, income growth, household occupants, median household incomes, expected rent to income ratios. We look at home values. We look at total population density in a zip code. School system's important, as Bill mentioned, also as a factor. So we take those set of criteria and kind of bump them up against what are the national benchmarks, and we want to see that we're outperforming those national benchmarks, and we certainly are in every category here.
Great. And then because I know you've got sites across, multiple states across the U.S., can you talk about the importance of like the local sponsor, the boots on the ground, like Bill and Leo Brown Group, like how you build the relationship and the importance they come into play to like actually bringing the project to fruition?
Yeah, of course. So I mentioned we have 5 built-to-rent communities today. 4 of those we're the sole GP on, and that's a lot of that has to do with the fact that we're located regionally here in Dallas and in Tulsa, Oklahoma, where we also have an office, and that helps us cover markets like Tulsa and Oklahoma City and Bentonville, Arkansas, and Kansas City. That works very well for us from a regional standpoint, and we can be close to those markets where they're a short drive away from our office in Tulsa or our office in Dallas, where we're also doing looking at some things in Texas. But we think that's critical to really, make sure you understand a market and you're physically there. And for us, we also have a property management business, so a lot of that team is headquartered in Tulsa, and they can easily access those locations. So, when we talked to Bill and the rest of the Leo Brown team, going back probably 4 or 5 years about what we were doing here with Red River and our commitment to build rent and building a platform around build rent, that they were quick to say, hey, we think this upper Midwest would be a great market, would be a great area for it. And we said, hey, let's lock arms and do that up there in this region, because you guys have that on the ground expertise, and we can bring our processes and systems and kind of what we've already created from a build to rent development standpoint, having the plans, knowing how to construct these things, knowing how to manage them. So really it was a great fit. It's been a great partnership to date. As I mentioned, we're in lease up on our project in Whitestown, Indiana here, submarket Indianapolis right now, where we partnered with Leo Brown. So, and that's going well, off to a great start, and they've done a great job building for us out there too. So I think overall would say, you picking partners is critical, and certainly having guys who have local on the ground expertise, is a big part of that.
Great. And Bill, one of my favorite parts of understanding and underwriting deals is just the story? Like, how did you find the property? How did you select the site? Because every project has a very unique story. And I've learned over the years that the bigger the project, usually the more unique story and the more stones you have to overturn and maybe throw around. So tell us about how you found the site.
Yeah. So really, it goes down in this case, really goes back to a broker relationship, a broker that had helped us out on other projects in the past, and really finding a site that's not marketed for sale. So in this case, it's just a 20-acre parcel, which is rare in a upscale suburban area that had been slated for multifamily development, but for one reason or another, nothing had gotten done. Another developer had owned the site, and our broker was aware of it and had just realized that the former developer kind of fallen out of contract with someone else, and she had approached us about potentially building senior housing on the site. And Ryan and I and the Red River guys have been having these discussions for a year, and she said, "Well, there's a senior community across the street," but I'm like, "Well, we're really thinking, BFR." And then, kind of a light bulb went off. And then we did a little research, as we mentioned, on the home values nearby. And then the growth of it's called Austin Landing. It's kind of like the Midwest town centers with the big sporting goods store, and a handful of restaurants, multifamily housing, and concerts on the weekends. And, really the growth of that as an amenity, just being a couple miles down the road. We thought the area is perfect, and it's just 2 miles from Interstate 75, which connects Dayton and Cincinnati. So yeah, kind of all the stars aligned, and it just seemed like a natural fit. So really excited about it.
So from the time like you, Ryan, and your respective groups said, "Hey, let's put a deal together," from the time you guys had that, I'll say, handshake agreement, how long was it until this deal was put under contract?
Pretty quickly on this site. What'd you say, Ryan? A few months, I'd say.
Oh, wow.
After kind of scouring the market. This was our first, between Leo Brown and Red River. This was probably the first site identified that we really made an offer on, to my recollection.
Yeah, that's right. I think it was about a couple of months, and we moved quickly. Obviously, it was a little bit of a complicated entitlement process, as Bill said. It's a high barrier to entry community, and we had to kind of work closely with the local government there to get the right zoning and kind of get the right unit mix, and so that was a lot of work that went into that Bill was instrumental in. But at any rate, yeah, it was fun to get one kind of put together quick, and excited to get this one out of the ground.
Well, that just speaks to the expertise of, hey, you're working with someone that's already in the market. They have the relationships with the brokers, and they're already in active deal flow. That's something you can't build overnight, but you partner with Bill and his group, and you leverage their decades of experience. All right, so Bill, here's my next question. And as we kind of go down from the opportunity, down the macro to the site, we're actually going to talk about who's building the project. Now, I think a lot of investors can relate to a fix and flip project they've done, a multifamily value add project that they've been involved in as an investor, or doing themselves. And no matter how good it looks on paper and how good the pro forma looks on Excel, I think every real estate investor out there has their horror stories with GCs and their respective subs of timeline issues, walking away over budget, yada yada, all that. So can you speak to the GC arm you have and how you're actually able to execute on there with such confidence?
Sure. Our GC group has been around a handful of years and has successfully completed numerous of our senior housing projects, both in Cincinnati area and Metro Indianapolis. And similar to locating land, it's not that different on the construction front. That we have relationships with a lot of good subcontractors, and some of those would travel from Indianapolis to Cincinnati. It's a quick 1.5-hour, 2-hour drive. So really, the relationships with the subcontractors is key, and having a continuous flow of deals. We typically do 2 to 3 senior housing deals a year, try to do 1 to 2 build for rent deals a year. And so we've been able to keep those subs busy. And for that reason, we're able to get competitive pricing. And on the grand contracting front, I think we're at a pace to do about $150 million in development a year. So Grand is building all of the Leo Brown projects. We're also doing a fair amount of third party construction for regional multifamily developers that anything from 3 to 4 story podium to suburban walk up is kind of the thing as of late, and even workforce housing. So they've been able to execute on a variety of project types, and really just having those relationships. And what it creates, Chris, is really alignment. When the developers are aligned on the construction front, everybody's got the same goal: on time, on budget, on time, on budget. So we've had those horror stories with the unaffiliated third-party GCs, which was really triggered for us to launch. And it's been years in the making. We've got a team of about 5 to 6 partners and executive level guys on the in the office every day at the project sites very regularly. So and they're working on the Whitestone project currently. And part of that secret sauce is identifying a residential home builder to come in and work underneath the GC to really keep the pace, because it is a large task. But we're excited and confident and ready to go on this one.
Well, as an LP, I am thankful for the black guys you've taken to get to the point where you've got the that great partnership and the track record, because I don't know any investor, and actually a lot of sponsors that I've invested with, the ones that are great at what they do have similar stories of just that, turbulent ride and, third party stuff, and then bringing it in-house and really bringing in like key leadership. So like that excites me. Now, can you walk us through the kind of like the construction timeline and milestones? Like as of today in Q3 2024, where are we in kind of the overall development process of Stone Hollow?
Sure, yeah, I can take that, Ryan. Feel free to jump in. But we're fully entitled and permitted. As we mentioned, the zoning took 7 to 8 public meetings, neighborhood meetings, and those are all behind us. So we're fully entitled. Really ready to go. Project is essentially shovel ready, just forming the capital stack at the moment. In terms of construction duration, we're looking about 22 months from initial groundbreaking to 100% completion. And we would Ryan might have to help me on this part of it. We would hope to be delivering units at about 12 months, if I recall.
Yeah, in that kind of 12 to 13 month range, I think is when we would hope to have the first phase delivered. And for us, we build these things in phases. So the first phase is always the clubhouse or amenity center, and then usually around 20 or so units, and then we're gonna build out the remainder of the project in phases, which works great because we're able to start bringing revenue in the door right there in kind of month 13 and get folks moving in. So we're leasing up as we build it.
And this is something that I really want to highlight, because this took me a while for my head to wrap around, because I've invested a lot in like traditional multifamily, vertical multifamily. And I mean, they're great. One of the constraints is until the whole building is complete and every part, every unit, everything is checked off, you can't get your certificate of occupancy until the first and the 200th or the last unit is all ready to go. Which, hey, I understand that from a construction and safety perspective, but from a lease up perspective and getting cash flow in the door, that's really not ideal. And that's one of the great things about BTR is that, as Ryan said, they can deliver it in phases of 20, 30 units at a time while they're building the next phase, and because that will allow them to lease in. So Ryan, what's the typical like monthly lease up you see? If you're having, I think you said 200 units for this project.
That's right. Yeah.
What's your estimated like monthly lease up?
It varies by community, but I'd say on average we've seen in the 13 to 17 leases a month range. Is pretty typical for us.
Okay, so probably about a month and a half or 2 months to kind of lease up each phase.
Yeah.
Okay. Now, can you just take a step back and continue talking about the overall construction process on the timeline of it, how you're delivering that, but also, how you're also keeping the residents happy? Because one of the things that I like about, your group and how you have Trulo Homes is you guys are very focused on just ultimately having a happy customer, a happy client, which I find a lot of times, real estate landlords don't have that kind of like attitude of, hey, let's have a happy resident. So getting the early COs are great for us investors. How do you keep the residents happy during that process?
Yeah, it's a big deal. And early on, that was a decision point for us. We said, hey, do we want to do third party management and not have to deal with maybe some of the people headaches and that come along with building out a property management business? But we went the other direction and said, no, look, we want to have control over that part of the business. We want to be able to deliver a great experience for our residents. We know that we believe in going to strong secondary markets where there's not as much competition and there's also not as much supply of this product type, which this market certainly fits that criteria. In terms of how we do it, it's about cordoning off those phases and fencing it off and understanding that you want to keep the construction zone away from where the residents are living. And so that we design every one of these projects, we design that so that you're having as little impact as possible on the residents that are living there. It's not always perfect, but what we found is that it doesn't hold back leasing. Once we get that, the key thing is once we get that clubhouse and the first phase of units built, then we start to see that momentum really pick up. And obviously it's even easier once the whole thing's done, but we find that building in phases gives us, a huge advantage for all the reasons we already mentioned.
Yeah. And two things I really want to highlight and why I'm, excited to be investing in Red River and, helping to promote you guys is that I like the attitude you guys have towards your residents. I always use that as a bellwether. Like, hey, I'm an investor. I want great returns, but I always want to provide a great product or great service, whether it's real estate or whatever it is. I want to be proud of it. And just the way you guys have always talked about your residents, you've obviously cared about that and you care about, a first-class service, but ultimately also like bringing in property management. Property management's a headache, whether you are in-house or third-party management. And just like we talked about on the GC side with Bill, bringing that in-house, I've always found the most successful sponsors I've worked with over the years, they've gone through the same growing pains and they've invested the time, the money, and the leadership bandwidth to go out there and bring that third-party management. Or I'm sorry, to bring it in-house rather than having a third-party management. Now, can you paint us a picture for like what amenities this community will have? Because I always tell people, hey, we're building a horizontal multifamily project here. And it's not a giant rectangular box. We're using that metaphor lightly. But talk to us about the amenities that the residents get at your communities.
So with Trulo Homes, what we're really trying to do is give our residents the best of both worlds between a suburban rental home and a Class A apartment community. So on the apartment community side, we've got, a large clubhouse. We've got a 24-hour, very well-equipped gym. We've got resort-style pool. We've got, entertainment spaces in that clubhouse that our residents can use. We've got dog parks. We've got usually a kind of an open area where, a lot of times there's a playground or bocce ball or some kind of activity that our residents can take advantage of. A lot of green space, and this particular site has a lot of green space, frankly. So it's in a well-developed area. It's going to be a beautiful site. And then on the home side, every home is unattached. Now, sometimes we'll attach the one bedrooms, but that's kind of 50-50. But the twos and threes are always unattached. Each one has their own private backyard. So everybody's parking, either surface parking, and then we have covered parking and garage parking for rent. They're walking out of their vehicle and they're walking to their front door. So it really feels and lives like a home. The finishes inside are, Class A quality, high ceilings. So it really gives those residents, the best of both worlds between a suburban rental home and the great amenities of a multifamily community.
Now, you mentioned the dog parks, and you may not know this stuff off the top of your head, but as I became, owned more units and, just a better real estate investor myself, I think my first reaction was, hey, no pets allowed. Well, then I realized, especially in Colorado, not allowing dogs cuts off probably more than half of your resident pool out there. And then, opening up has attracted, the same quality, if not higher quality residents, but also it just opened up the pool a lot more. I'm curious, like, do you know what percent of your residents have like dogs or pets, just off the top of your head?
It varies by community, but I would say more than half. And that's where having that private backyard where you can let the dog out is such a big deal. I have lived in an apartment with a dog. You guys may have as well. That's not a lot of fun. I mean, whether you're going down the elevator, you're trying to find some grass, it's freezing outside. It's a lot better to just let the dog out.
All right. So, Ryan, can you just walk us through? This is a two-part question here. I want to kind of understand the high-level return profile of, of like this project, but at the same time, can you kind of walk us through? You said it's about a 5-year hold. Can you kind of walk us through year by year? What type of returns the investor can expect in terms of, cash flow, if there's any depreciation, the exit, just things like that.
We would project a hold period of, call it 5 to 6 years, and I mentioned, call it month 13, we're starting our lease up. We're building out the project, hope to be done by maybe month 22, month 23, kind of right in there. And at that point, we would hope to be 60 to 80% leased once we get to completion of construction. And then we're working to lease up the remainder of the project and get it stabilized. And so let's say that's happening sometime around month 30. We, at that point, are going to look to refinance our construction debt and take our construction lender out and put some kind of permanent financing on it, fixed rate financing, most likely, where at that point we flip around to distribution mode and would expect that we would deliver high single digit to low double digit yields to our investors at that point. And from there, we're going to look to grow NOI, keep pushing rents, hopefully, and we've seen this bear out. If we're an undersupplied market where there's not a lot of competition, like a market like this market is, where we're a first mover with this product type, we see where we can really push rents in a way that you can't with kind of more traditional multifamily. And so we're gonna grow, look to grow NOI, and then call it year 5. End of year 5, look to take the asset to market and hopefully exit for a great return at that point.
Who is the end buyer for a project like this?
Yeah, there's a deep buyer pool for a project like this. Build to rent is as you mentioned, fast emerging subsegment within multifamily. Everybody in the institutional world is aware of this, and there's a lot of guys that are, both institutional investors and even large public companies that are looking to buy assets just like this. And this is of a size and scale that it fits really well into a portfolio for one of those guys.
All right, so kind of recap here. So about the first two and a half years, you're in the build phase, the leasing up phase, and that's just the investment. And then usually around between the 2.5 to 5 year mark, stabilized cash flow distributions, hopefully in the high single digit, maybe pushing double digit type returns, and then a takeout year 5, year 6. And then I think altogether, you're saying this should hopefully net around a mid 20 IRR, right?
That's right. Yeah, that's what we would underwrite for our investors here is a mid to low 20s IRR and a 2x multiple.
I love hearing those numbers. All right, so just zooming back out from this project, Ryan, just kind of like recap not just this project, but where you see the BTR asset class growing, where you see Red River growing, and just kind of like what's your overall company perspective looking like?
Yeah, sure. So as a firm, I mentioned this earlier, but we've been a first mover or fast mover in what we think are strong secondary markets. And I touched on a lot of those markets earlier, but, we've really seen that strategy be very successful. Our first community fully stabilized. We just refinanced it and went into distribution mode. That's in Tulsa, Oklahoma, in a sub-market called Jenks. So we're seeing that thing really perform well. We're also seeing us be able to manage and execute from a property management standpoint, and that's a real advantage, we think, in terms of optimizing value and returns for our investors. And And then also when you're building in these undersupplied markets, I think you got more ability to push rents, and we've been able to do that. We've been able to do that on our community in Jenks, and we expect to be able to do that in Oklahoma City and Kansas City and so forth. So we're seeing really strong lease ups, great demand. Um, there's as you look at the demographics, we see two big populations. We see the young professionals that are transitioning out of apartments, guys we talked about earlier that are tired of taking the dog out. Maybe they're not ready to buy a house, but they want something that feels like a house. And then on the other end, you've got empty nesters, folks that have raised a family in a suburban community. They don't need the big house anymore, but they love having on-site maintenance, and they don't have to they don't have to deal with any maintenance issues, and the grass is taken care of. Everything's kind of done for them. They can lock and leave and be flexible and travel and maybe be close to grandkids that are living in a community. So that's what we really see. There's obviously a big housing shortage in the United States that underpins a lot of our investment thesis here, and we think this product type is something that the market really needs, and our residents really love as a good housing option.
And then, Bill, I'd like kind of get your perspective on here because as I've researched your group's track record, you guys have obviously a lot of expertise in senior living, and pivoting from that business or adding in BTR that model both as a business and also for your own investing on there. What made you feel excited and also comfortable with adding BTR to like your mix?
Yeah, good question, Chris. Really, the first thing was we've got about 200 units in our portfolio that we developed, own, and manage that are connected duplex style. We call them cottages, which are essentially built for rent, and they're 100% occupied. They're always 100% occupied. Typically wait list, and typically the rent's $4,000 a month and up with no services. So that's really the genesis for us on, hey, guys, maybe we could do this at a larger scale because it is a desirable product among seniors. So we're confident that segment of of the overall population, the seniors, do desire a product like this. And just to echo what Ryan mentioned, it's obvious that a lot of the younger folks want to graduate onto an apartment. And we're seeing it firsthand in our Whitestown community where people are moving in. The first time renter for the specific unit, it's like moving into a new home. And a lot of folks, wouldn't be able to experience that if it weren't for this product. So we see that age segment, and then the older working professional that just wants something maintenance free. So again, really excited and just see a lot of growth in this segment.
Right. Well, gentlemen, Bill, Ryan, thank you so much for coming out here. As I've mentioned a few times, I'm excited to be part of the journey and, an LP in this project. But also just, I always tell my friends and my investors, I've got one of the best gigs in the world. I get to sit down with experts like you guys and personally pick your brain for my own benefit and other people listening on here. So thank you guys. And for our listeners, investors out there, if you want to learn, if you have more questions that we do our BTR educational series, please let me know what type of questions or angles or people you want on here to learn about. I'm always eager to learn and network. And if you have more interest in the BTR deals, let us know, or whoever shared this podcast with you as well. Keep you up to date as to what Red River is doing, what they have in their pipeline. So thank you for listening. And again, Ryan and Bill, thank you guys so much.
Thanks, Chris.
Thanks, Chris.
Bye, everyone.